Hi everyone, welcome back to the US CPA classes for regulation exam. In this video of federal taxation on property transaction, we'll be covering in detail about basis of stock after the stock dividend and stock split. In addition to that, we'll do some practice question as well. So let's dive into to understand the basis of stock after the stock dividend and stock split.
Now we need to start with the basis of stock after the stock dividend and stock split. Right? Any idea what is stock dividend? What is stock split? Have you guys heard this term before?
Yeah, it's coming income from dividend, maybe.
Anyone else have any idea about stock dividend? Yeah, please do not hesitate. Don't worry, no one is judging you. Rakesh, Pooja, Divyanshi, any idea? Yeah, Matthew, you're right. So, stock dividend is basically instead of providing cash, company provide additional share to the respective shareholder. For example, you are holder of 10 share of Tesla, right? So in this year, Tesla is going to make some bigger investment, and they feel it is better to issue stock rather than cash to the shareholders as dividend, so that they can utilize that cash for the upcoming investment or upcoming capital expenditure they require. So what they say, let's assume, like I'm just sharing an example, as in, like we'll give you one stock to the 10 stock shareholder. So in US, like stock is basically share, not inventory, right? So the Tesla has come up with the stock dividend plan where they are ready to give one share to each shareholder who is having 10 shares, right? So let's assume you have purchased at the beginning 10 share of Tesla for $100 each, right? Maybe if you want, you can just note it down this illustration. Mr. X, like if you can note it down this example or illustration, Mr. X has purchased 10 share of Tesla at par of $100 each in 2020, right? So what is the total investment of Mr. A?
$1,000.
$1,000, right? So now, after 3 years, in 2023, Tesla has decided to issue one stock dividend to 10 stockholders, right? The person who is holding 10 shares will get one additional share as a stock dividend, right? So now, in the hand of Mr. A, what will be the value of investment and what will be the number of stock? So here,
20 shares for 1,000.
Pooja, sorry?
20 shares for $1,000.
No, 11
11.
share.
11. Yeah.
1 share for 10. So 11 share.
Oh,
So,
sorry.
yeah, number of share will increase to 11, but the investment value remain same, $1,000, because Mr. A has to record investment at cost, not at fair market value, right? So the stock dividend will result into increase in number of share, but the value proportionately does not change from the investor point of view, right? Second is, now let's continue with the same example. Now the stock of Tesla, which they have issued at par of $100 each in 2020, they have listed on a stock exchange. And now market value of the stock is, let's say, $10,000 per stock. Market value, if you can note it down, market value of the Tesla stock is $10,000 per share, right? So now what Tesla is facing challenge that there are so many small investors, but those investors cannot afford to buy a share of $10,000 each, right? So they come up with a new scheme. It's called stock split. They said like one shareholder who is holding the share of $100 each will get 10 shares of $10 each. So they are splitting one share to 10 share, right? So now originally you are having 10 share of $100 each. The total investment was $1,000. Are you
Yes.
guys with me? Right? Now the Tesla has come up with the stock split scheme. They're saying each share of $100 each is now splitted into 10 share of $10 each. So what will be the number of share in Mr. A account now?
100 shares.
100 shares of $10 each. So what will be the investment value? 1,000, right?
1000.
Investment value remains same, only the number of share will be changing, right? So the stock dividend and stock split do not have any impact on the value side, but their impact is on number of shares. Clear everyone?
Yes.
So now look at the theory. Stock dividend is a payment to shareholder that consists of additional share rather than cash. That we all agree, like it is a additional share but not cash. Stock split or stock dividend increase the number of share, which we have discussed. Stock split and stock dividend both increase the number of share of company. For example, after a 2-for-1 split, right? Just mark this word, 2-for-1 split. That means one share which you have in hand is going to split into two in future. So this is how they'll be writing or they'll be communicating. So that's a communication or language differences which we have in India, how we speak in India and how they speak in America. 2-for-1 split. That means one share is being splitted into two. Each investor will own double the number of shares and each share will be worth half as much, right? For example, like the earlier example which we will be discussing, $100 per share was the value of the original share, which has been 10-to-1, right? 10-for-1 split we have done. So each share is of $10 value, right? Same way here also, it has been mentioned. A stock split caused to decrease in market price of individual share but has not changed the market capitalization of the company and stock dilution does not occur. So with the stock split, right, we were discussing like earlier, the market value of share of Tesla was $10,000 each, right? Now it has been reduced by 10 times. That means $1,000 of per share $10 will be the market value of new share after the split. So that comes under the more affordable limits of the individual or small investor in US, right? Stock dividend or stock split increase the number of share, however reduce the value per share. And these transactions are generally non-taxable. However, change in the number of share an individual owned on the basis of those shares will also change. The basis of original share is divided when the post-event number of share. Right? So clear everyone? When you receive stock dividend, at that point of time, your number of share increase, but the total investment remains same. Whereas per share value will go down. Same is the case of stock split. In the stock split, total value of investment remains same, but number of share increase. If the number of share is increasing, so per share value will go down. Any doubt? So far so good everyone?
Yes.
Okay, let's do a practice question together. SSB Tax Corporation declared and distributed a stock dividend of 1 share for each 4. That means if you are holding 4 shares, you will get 1 additional stock dividend. Donna had 100 shares, and as a result of stock dividend, he received 25 additional shares. Right? So what is the stock dividend? 1 on 4. Right? So $100 shares divided by 4. That means additional 25 share Donna will be getting. Right? The stock dividend is taxable for fair market value of share received on the date of issue. Second is stock dividend is taxable since the stockholder received the stock in the company in lieu of cash. Third is Donna purchased 100 shares of stock for $5 per share. As a result of stock dividend, he must adjust the basis to 125 shares to $4 each. And last one is this is non-taxable because it is return of capital. Which option is correct out of these 4?
Last one.
Why? Is it a return of capital?
Non-taxable.
No, but you need to look at full statement.
It is not. It is not.
sir.
Right, this is not return of capital. So
Option third, sir. Option third.
yes, option third. Why?
Because due to increase of shares, the price will be decreased.
Yeah, per share cost will decrease. The overall cost remains same, but because of increase in number of share, per share cost will go down. Make sense, Manoj?
Not
Prakash?
clear, sir.
Okay. So maybe if you remember like last example which we have done, or this example I can illustrate. For example, Donna had 100 share and each share she has purchased for $5 each. Right? So what is the total value of investment she had? $500?
$500.
Right? Right, Manoj?
Yes, sir.
Right? So now the company has given her 25 additional share as a bonus share. So what is the number of share now? 125, right? And what is the value of investment? $500. So 500 divided by 125. What is the per value cost now?
4.
Right? So this is what mentioned in third option if you see. Donna purchased 100 share of a stock for $5 per share. Right? So the total cost is $500. As a result of stock dividend, he must adjust the basis to 125 share because now after bonus, it is 125 share. Shambhu, just 1 minute, right? So the per share cost is $4 after the dividend. Clear, Manoj?
Yes. Yes, sir.
Yes, Shambhu.
Yes, sir.
Yeah, Shambhu, what is your question?
Sir, so I am clear with the concept, but I had this one query. So, like, since these stock dividends are non-taxable, but it resultant it reduces the cost of original shares, right? So, isn't it disadvantage for the owner of those shares when he will be calculating the capital gains?
No, generally it is, you can say, tax neutral for the individual, because on the other side, if you remember the example I was sharing about Tesla, for example, you have $100 par value, 10 shares which you have purchased for $1,000, right? And the market value of share has increased to $10,000 per share, right? Now the market value of your share is 10,000 multiplied by 10, that is $100,000,
Yes.
right? So now if you are receiving one additional share as a bonus share, so your total number of shares is 11 and the cost remain same, $1,000, right? So per share cost will be 1,000 divided by 11, right? Let's assume $90. Let's assume $90 for simplicity of calculation, right? On the other side, the market value of the share will be $100,000 divided by 11. That will also become around $9,000 per share, right? So for him or her, it is almost tax neutral, both from the market capitalization point of view as well as the cost point of
Okay, so you are
So,
saying market. So
view.
you
Yeah.
are saying market value will also be adjusted for that stock dividend.
Yes, market automatically adjusts. If you now increase the number of share, it will automatically adjust. Same way like when you do stock split, right, which we were discussing, one stock to 10. So the market capitalization, if there is $10,000 per share and it is being divided into 10, so the remaining, like the new share will be $1,000 each. So that like new investor can purchase and do more trading.
Understood. Thank you.
Yes.
Sir, one small question. What is the
Mhm.
meaning of return of capital?
Return of capital means
What a return of capital?
very good point. So return of capital mean the amount which you have invested, from that money you are getting something back. That means, like for example, one company in which let's assume 10 of you have invested $10,000 each. So in that company, the share capital is $100,000, right? And let's assume that company is not earning anything, and out of that, even though the company has not earned anything, they are giving the dividend, right? So that dividend is generally from the capital. So they are returning your capital. So that is not your dividend income and that is not your capital gain. So return of capital mean when your capital, you are getting back your capital. Same like drawings in partnership form, if I would say. Make sense?
A little bit. Couldn't catch exactly. Is
Yeah.
it really happens that somebody gets the return on capital in shares, like what you are spelling?
Yeah, for example, like like some of the startup, they have pressure to give dividend, right? They sometime go for like VC round of funding and like take a lot of huge cash, and they have like signed certain terms when they are signing like shareholder agreements or other term sheets that they will be providing this much percentage of dividend, right? And most of the time it happen they are into the cash burn stage, but because they are being abide by the you can say term sheet or the shareholder agreement, they have to give dividend to the shareholder, minimum dividend to the shareholder. So that point of time it is possible that they are being paying dividend even from the share capital.
So it comes in a cash form.
Yes, it comes in a cash form. Yes, you are right. Or other example, like which I was sharing earlier, there may be possibility like 10 of you might have invested in a company together or form a company, and that company has not earned much profit, but like the shareholder passed in, you can say resolution for issuing the dividend. So it may be possible that issue of dividend from the capital. And then as we move forward in this capital gain chapter, you will see there are certain other situations could be possible. For example, let's assume 10 of you have invested $100,000 each, right? So the total share capital is $1 million. That $1 million you might have purchased a piece of land for let's say $700,000, right? And remaining $300,000 you might have invested on constructing the building, right? So you have invested all $1 million, and now you are selling those properties. You're selling those property, and that property has resulted into $500,000 of profit or capital gain. If, for example, your company is into the business of constructing the building, like you can say a real estate company, or maybe I would say builders type of organization, right? So in that case of scenario, you have earned $500,000 on top of your capital. But the total distribution, is, let's assume, $800,000. So first $500,000 would be coming from the profit which you have earned, that is the retained earning. But remaining $300,000, if you are distributing among yourself, it is a distribution from capital.